Hey guys, welcome back to the channel. I'm Wade, I'm your host for today. And today I'm really going to go over how to invest for beginners in the stock market in 2022. So if it's going to be your first year starting out, this is a great video for you. I'm going to talk about 4 different ETFs which are less risky than holding individual stocks. We know individual stocks go very risky, it could go either way. But these 4 ETF guys I'm going to give you today are a lot more risk adverse when you're getting started in the market, which is good for beginners. So I'm going to get started real quick, guys. The first one I want to go ahead and talk about is SPY, right? So it's pretty much the S&P 500. The S&P 500 is pretty much like buying the whole U.S. economy. It has the top 500 U.S. companies in it, right? So when you buy a piece of that, you buy 500 companies total, okay? And how they move and fluctuate. So for the past week, it's been down a little bit. For the past month, it's also been down to 1.49%. Over the past 3 months, it's up 6%. And for the whole year, it's up 24%. That's pretty good returns, right? And then if you look for a 5-year return period, it returned 104%. So the way you would go about buying the S&P 500 right here is you would just, this is one of my smaller accounts that I just opened a Robinhood. You'd put 20 bucks here, for example, because even though it says $461, you don't have to have the whole $461 to buy the SP 500 on Robinhood, because Robinhood allows you to buy fractional shares. So if you want to put $100 a week in this, you can just go ahead and put $100 a week. If you want to do 20 bucks a week, you can do 20 bucks a week. And there's ways you can have it reoccurring too, where it just takes it out of your account where you don't see it and you investing for your future, guys. Okay, so you don't have to buy a whole one, but if you do have the amount of money to buy the whole one, you just do 461.55 and you could buy a whole share, right? This is quantity here saying 1. So what you have to do is pretty much every week or every month, every time you get paid, put some money in the S&P 500, and it's gonna seem as you paying yourself. So that's one that I want you guys to buy. Then again, I'm not a financial advisor. Consult your financial advisor. I want to give you guys the safer, the more less risky plays. And buying an ETF is you investing in 500 total stocks is the safe ways to get one of the safest ways to get started. Okay. And then another one I have for you guys here, it is the QQQ. It has 100 companies in it. It's also an ETF, and it's the Nasdaq 100. This one's a little bit more riskier because it has to deal with technology stocks. But over the past few years, it has given phenomenal returns. So a week ago it's down to 2.8%. A month ago it's down 3.23%. 3 months ago it's up 5%. And a year over year it's up 24%, right? Year over year. And the 5-year return on this is, let's get it at the end here. Right now, at this moment, is 223% return on your money. So you can do the same thing with this ETF as well. And what you have to do is put 20 bucks. You could buy 20 bucks a week, 100 bucks a week, whatever floats your boat, as long as you get the hang of investing and slowly going in over time. And as you get comfortable, you can invest more and start looking at individual stocks. And then another one I have for you guys here, other than the QQQ, I have the DIA, which is pretty much the Dow Jones Industrials. It has 30 companies in it, the likes of Apple, Home Depot, I can't remember some of them at the top of my head. It does have Disney, in there, and so on and so forth. You can buy a piece of this ETF as well. It has done well over time. The 1 month is 1.44%. The 3 months is the 1 month is down. I'm sorry, it's down 1.44%. The 3 months return is up 3.94%. A year return, you're looking at 16% on the Dow Jones, and if you look at the 5-year return, you have 78% return on your money, right? So over time, you can average in into these ETFs the same way you would buy here. And then the fourth one here, I have the VTI. So the VTI is the total stock market ETF provided by Vanguard. So you buying pretty much every company that goes public in the United States that's publicly traded in the stock market, you buying it here when you buy this ETF here, okay? So you're pretty much buying like every single stock that's publicly traded in the US. So 1 week is down 1.57%, 1 month is down 2.49%, 3 months you up 4.54%, 1 year is up 21%, and 5 years is up 101%. It's pretty phenomenal returns when we talk about the stock market that normally returns about 7 to 10% a year. The markets the last 10 years been beating that 7 to 10% return. It's been more in the teens and in the 20s pretty much after COVID. So guys, these are the 4 ETFs I wanted to share with you guys today as far as starting off in your investment journeys for 2022. Go ahead, guys, and if you like this material that I'm giving out, share it with a friend. The link down below for the Robinhood account. If you sign up for Robinhood, you get a free stock, and I'll also get a free stock, so it'll help out the channel and help me grow. And just guys, go ahead and share this with a friend that you want to start investing. Like the video as well to help the YouTube algorithm for my channel, and also share it with a friend. Thank you, and subscribe to the channel as well if you guys want me to drop more content going in the future. Thank you, and enjoy the rest of your day. Bye. Love you.